Shaun, Haney, and Justin Funk here from RealAgristudies, and we are bringing you the results for the October 2023 Canadian Farmer Sentiment Index. Thanks to everybody that completed this month's survey. I really do appreciate it. We had a great number of farmers and a whole bunch of new ones, actually, that have joined the panel, which is really super exciting to get your perspectives as well. So what we do here is we run through some of the high-level results to make sure that you get that, those results back to sort of the incentive for doing the survey. And if you do have any questions at all, do not hesitate to reach out to me, Haney at RealAgriculture.com, and Justin and I will do our best to answer those questions. So, Justin, let's dig in and get into it here. It's the October 2023 results.
All right, sounds good, Shaun. So for some of you, this is your first time seeing these results. So just want to take a moment and explain what it is you're going to be seeing. So the purpose of the Canadian Farmer Sentiment Index is to give you, the farmer, a voice on a number of important issues so that stakeholders who are also maybe watching this video can make better, more informed decisions, taking into account some of the things that you're sharing with us. And so we're taking a look at a number of important attitudes and perspectives with respect to the financial position of your farm, both now and in the future, your outlook on the ag economy, grain markets, and another very important issue, which is mental health. And so we've been conducting this survey every 2 months since September of 2022, and we compare each month's results to one another. Now, what you're going to be seeing here is the results of our October Sentiment Index, October 2023, and in total, 640 respondents completed the survey, which is an outstanding sample size, by the way. And we had a wonderful turnaround on this. I think we sent this out, Shaun, on a Thursday, and within like 24 hours, we had 400 responses, which is great. That allows us now to interpret these results within a degree of accuracy of plus or minus 4%. So we have a lot of confidence in these results. This is representative of the marketplace. So in this report, what you're going to see are the results of the following questions. How do you see the current and future financial performance of your farm? The current and future optimism towards the Canadian agriculture industry and the ag economy. Willingness to make investments in the farm. How you feel about risk management with respect to the grain and livestock markets. And then current state of mental health. What we're going to share with you are indexed numbers. So in the survey, we provided you with, at the very least, a positive and a negative response, and in some case, a neutral response. And we subtract the negative from the positive to get a differential, which we then add to 100, and that creates the index. So our range here can be anything from 0 to 200. And by looking at it the same way and asking the same questions over and over again from period to period, we can compare period to period and not just look at how did the answers change from month to month, but also, look at that with respect to what else is going on in the industry right now, whether that be weather or policy or prices, and also the production cycle, knowing that how you answer these questions might change based on where you are with respect to seeding or planting or harvest or in season or off season. So here is an example, and I just want to share with you how we get these numbers. So this is the results of one of the questions that you answered. So would you say your operation today is financially better off, worse off, or about the same compared to a year ago? Well, 23.2% of you said that we're better off today. 33.2% said we're worse off today. And then the rest said we're about the same. So when we subtract the worse off, so the negative response from the positive response, we get a negative differential of 10%. Well, we add that 10 points to 100, negative 10 points. So you add negative 10 points, that creates now a negative index of 90. So that becomes our index number, which we can then compare from period to period. So here's what we're going to be sharing with you and talking about. This shows all of the different questions that we ask at the bottom, now in categories. And we look at 100 as being our neutral line. So anything that falls above this line is positive sentiment. Anything that falls below this line would be negative sentiment. So, Shaun, are you ready to dig into these results?
Absolutely. And, I just want to remind everybody that we've been doing this going back to September of 22. So we're going to see what not only are you seeing the results for this past, for October of 23, but how that reflects and compares to past months, which I always find so interesting. What are some of the trends here? So let's dig in.
Yeah, and there are some trends. So here's the first one. This is showing previous results from current farm financial performance, where you can see it's a little bit of a bell curve there. The trend has been trending downward, sort of at a steady pace. And so the way we look at it today is that, where we are in October of 2023, farmers are considering their current financial situation to be worse off than it was a year ago. And you can actually see now, a year ago, where we were in positive territory.
Yeah, and why I think the October 23, why doing the survey is important in that month is that harvest is complete for sure, for the most part on the prairies. And in other parts where corn and beans are more of the prevalent crops, a much better idea as far as what those yields are going to be on the cropping side. So this is, what you've seen here is sort of a deterioration through the growing season of how people feel about their current farm financial performance. And of course, livestock is a little bit different than that, but that's what comes to mind here is people having a little bit better idea of what they have once they get that combine through the field.
In this survey, Shaun, we followed up for those that said my position would be worse than it was a year ago. We asked why, and we presented some options. Yeah. So we'll get to that here before we conclude our video today. The next series of bar charts focuses on future farm financial performance. So do you feel that your farm will be better off, worse off, or about the same a year from now from a financial point of view? And one thing that I just want to illustrate here, this one has remained relatively consistent. There's been a couple blips, but it has consistently been in the negative. Now we see a little bit of a trend upward here, which I think is positive, but you can see it's never gotten above 90. And I think that we agree, you and I, that, now that we have a year's worth of data, this one might just always be in the negative because of the uncontrollable factors that farmers face, a year ahead.
Yeah, but there is so one of the things that I picked out of this, Justin, I like your comment on it, is that not only has it always been negative, but it's always been less than how people feel about their current farm financial performance in those months. But what we're seeing is in the last 3 surveys, it's been creeping higher, still negative, but creeping higher. So those two numbers are actually coming together. So current farm financial performance is 90, future farm financial performance is 89. I didn't do the math, but I don't think the gap has ever been that close. So that's something we need to definitely look at. I think when we do the survey again in January, is there a chance that future could be more than current?
Yeah, that's a great observation. Well, again, we asked the question, why? Why do you think you will be worse off a year from now? And there are some consistent results relative to the current situation, but there's a couple there that I think we need to comment on that are a little different. So when people are projecting out, there's different reasons why they might be worried. The next area looks at the ag economy and just the general ag industry. So this one has been all over the place too, but we actually see in this instance, it's pretty level. And I want to jump ahead here so this is looking at short-term ag economy. Okay. So within a year, the next question is looking at the next 5 years. And, for the past little while, we've been seeing this one trending down. We're actually starting to see this one tick up again. Now, it'll be interesting. Is this another blip, or are we similar to the future farm financial performance? Are we going to see this one maybe start trending upwards as time goes on? Please note, though, still never been in the positive. Has always been a negative sentiment.
Yeah. Yeah, I would love that number to be in the positive. Like I'd be interested to see what has to happen in order for that to transpire. So
now the next area is confidence in making farm investments. And so the way that this one is positioned is now a good time or a bad time to be making investments in the farm in things like land, and buildings, and machinery and things like that. This one, quite honestly, has not budged at all. Honestly, I don't even know if this is one that we need to ask every time, because the numbers don't really change unless something changes, perhaps with respect to interest rates or the commodity markets or something like that. This one has, I mean, you see it right there. It's remained pretty flat from period to period.
Yeah, although we've seen a lot of fluctuation for the most part in current and future farm financial performance, it has not, that those changes or that variability has not impacted people's confidence in making farm investments. Nor, and you would think as well, as we've seen interest rates go up in the last 13 months, you would think that that would cause confidence in making farm investments to go down, and it really hasn't changed it. So I'm interested if we do see interest rates maybe a little bit of maybe we could see an environment where interest rate starts to go down in the back end of 24, like some economists think. Does that change the number? It hasn't changed on the way up, so I don't know. Is the reverse true? I do wonder. Is it worth asking this question? But I guess I'm a little bit more interested now in what changes it.
Yeah. We do see some differences with respect to farm size on this one. Larger farmers are more inclined to make investments, and so are
Yeah.
younger farmers, for that matter. And that's something I think too that is interesting, and maybe optimistic from that standpoint.
Yeah, the larger you are and the younger you are, the more inclined you are to make farm investments. That's very clear from the data.
Now, these next two bar charts represent, where my income is actually coming from. So we look at confidence in marketing crops. And this one has been trending downwards for quite a while, but we're starting to see it level off a little bit. So, you compare that to, I'm just going to show you here, outlook on selling crops. Is now a good time to sell or not, essentially, is how this question is positioned. You can see, back in September of 2022, we were way in the positive, and then took a sharp turn down when we got to November, and it carried through until the spring. And then in the summer, we saw it shoot back up again. And here it's gone down, but it has still remained in positive territory.
Yep. In terms of outlook on selling crops, I think, based on all the different commodity analysts that we interview every week on Real Ag Radio, I'd say that farmers are a little bit more bullish on the market than maybe some of the analysts are. So, we'll see who is right or who is wrong on that. I always look at these two different questions and how they relate to each other. It's one thing to think the market's going up or think it's going to be going down. Your confidence in what you need to do in order to market in that environment, I think, is really, really important. I'd like to see that confidence in marketing grain to be, it's close to neutral, but I'd like to see it like where it was in September of 22, where it was above 100. We'll have to see if that does change as we get into 24 here. But farmers, this is a tough market for farmers to figure out what to do. I very much sympathize. This has been we've been through some very, very good times commodity price wise, and it's a little bit more on shakier ground now. There's a lot of geopolitical things happening. It's a tough market it's a tough environment to market your crop in.
Well, and so that's why one of the reasons why we asked the next question is state of mental health. All of this is going to likely contribute to one's mental health, plus other factors for sure. This one is my mental health position better, worse, or about the same as it was a year ago? And you can see that this one has really kind of remained unchanged a whole lot, really since the inception of this project. And, it's never gone really high. It's never gone really low. And that actually speaks to, and I just want to be clear about this, that the vast majority of respondents said, it's about the same as it was a year ago, which would constitute that neutral number right there. So there's not a lot of fluctuation on the other ends where a lot of people are way better off, a lot of people are way worse off. No, you're seeing very small percentage of people actually answering one of those two ways. And I got this comment again, we offer a comment box at the end, and I've seen this several times, and I have no idea if this is the same person, but the comment was, my mental health has been pretty good over the past few years. So, to be unchanged is a positive in this case,
Yeah.
because of where I'm starting from. So that's one that, I think we look at this more from a standpoint. I think that we want to kind of see this one be level. I mean, yes, it would be great for it to all of a sudden shoot up into, way positive territory. But I think where it is right now, I think we look at this as being a bit of a win.
I think 100% you're true. You've absolutely nailed it, right? So to me, this shows is that, given the volatile environment that look at the outlook on selling crops and the volatility and the roller coaster of a ride that Canadian farmers have been on the past 13 months. Having said all that, and even with, for the most part, us being negative on future farm financial performance as a whole, we've got stability. Now, some would say that we'd like to see overall mental. We can always make improvements. Well, of course that is true, but I think there's a lot of positives to take out of the fact that how people feel about their state of mental health, given all of that is happening, the noise on the left-hand side of this chart, we've been stable when it comes to mental health, and I think that's a big win.
Yeah. So I'm going to show a new chart this time that we've never shown before, and that is taking a look at the results, comparing October, so our latest results, to the aggregated average results over the past year. Now, this was a goal of ours, to be able to get to this point. So the dark blue bar shows 12 months worth of data. So knowing that we do this every 2 months. So that gives us a look at the year in its entirety. And then we can now, moving forward, compare, okay, where are we today relative to that benchmark that we've established as of September 22 to August of 23. And so this gives us, kind of an easier look. I mean, if we keep showing the month-by-month trends like we just did, that's going to become a very messy chart very quickly. It already is. But this is starting to show us sort of what are we comparing this to? So, you can kind of see the generalized trends here with current and future financial performance. The trend has generally been downwards on current financial performance. It is moving upwards on future. And so I think that's a very important observation. You take a look at the trend on the Canadian ag economy. It's down off the average from the previous year compared to now. But the future of the ag industry has really remained unchanged, as has the willingness to make investments. In fact, several of these, really, when you look at them compared to the average, and this is important because often, if you go back and look at some of these old videos, we see like all of a sudden a drastic change. We wonder, like, is this a blip? Is this something that we can expect? And then it comes back down to normal. Well, this normalizes things a little bit. What we see here is that the generalized trend has been, the outlook on selling crops has been relatively neutral. Here we see an increase in October. It'd be interesting to see if that trend continues. And then, like we just talked about, mental health has remained pretty much unchanged versus the average from the previous calendar year.
Yeah, what I like about this chart is, like you said, is that some of these, like, outlook on selling crops, it has been a roller coaster, and so this kind of smooths it out a little bit and allows us to look at how people feel in the current month versus what the average has been. So it's there's again, though, if you look at current and future farm financial performance, like we talked about, those two are converging on each other, which I find very, very interesting.
Yeah, very, very close. So to wrap this up, in this survey, we decided to go in a little deeper and ask some follow-up questions related to why you said negative or worse off with both current and future farm financial performance. So keep in mind, our sample gets a little smaller here because only a handful of people would have been asked this question because they indicated the worse off. Okay. But here are the reasons for worse off. So this is primary and secondary. So we asked two questions. What's the primary reason? And then we asked, what is the secondary reason? And as you can see, commodity prices is the primary reason. 30% of people said that is the reason why my financial performance today is worse off than it was, followed by input prices and then weather. And let me just say before we go any further, weather was very geographically based. So you saw
Yeah,
more people in the West answering based on weather than you did in the East. But this kind of gives
absolutely.
you a look at, what's really on people's mind, and it's commodity input and input prices.
Yeah, and we have seen a reduction in some of those input prices. So as we move into the 24 crop, how that impacts how people feel about their current farm financial performance and whether that changes if we do hopefully see a further reduction in prices on like things like diesel or fertilizer. You're coming to Western Canada, you know, Alberta, really, really poor from a weather perspective. Parts of Saskatchewan, indeed, even parts of the area of Saskatchewan that were fairly good from a moisture standpoint through the growing season really had a tough last 2 months or 6 weeks when it came to the crop finishing off, based on conversations I've had. So, what's interesting here is cost of borrowing. Even with the high amount of variable mortgages that are out there, and I can't remember what that number is when we've asked that in the past, but relatively low, like
Mhm.
not super interest. The rising interest rates, even with all the farm debt out there, a lot of focus on the revenue side versus the cost side when it comes to cost of borrowing. I know input prices are a cost, but um, you know you look at the ebb and flow and the volatility of how people's outlook on selling crops has been from a bullish bearish standpoint. It kind of no surprise that commodity prices are the number one answer here.
Yeah. Well, so interesting. You talk about cost of borrowing. I'm going to flip the chart here, and we're going to look at the reasons for future farm financial performance. Okay.
Boom! Look at that change.
Okay. Now, commodity prices have remained the same, but look at this: cost of borrowing has gone way up. So I
Yep.
think people, are very concerned about that. There's one other I want to point to, because it's new. It was not indicated by anybody as being a primary reason for current financial performance. Cost of labor is starting to creep in here, and
Oh,
and there's a trend there with larger farms being the ones that are indicating that particular point of concern.
yeah.
So that's,
Can you go back a slide? That's a really interesting point. Can you go back?
yeah.
Weather also much more of an impact on the current farm financial performance than our concern about weather is less
Yeah,
in the
and
future.
it's like, I mean, likely because what has happened versus what will happen. I think people are hopefully hopeful and optimistic that weather won't be an issue. These others are maybe a little bit more certain or known. Um, you take a look at input prices, for instance. I think right now a lot of farmers are locking in their seed purchases, and they're, pre-buying chemical and stuff like that. So, there may be a little bit more certainty with respect to those things. Commodity prices, they see the trends happening. And I think the cost of borrowing is the one where there is some certainty because, if their, loans are coming for renewal and they're going to have to renew at a higher rate, that's something that's clearly going to influence their financial situation.
Yeah, and if you think about the weather, okay, that in Western Canada, for some ranchers, they've had to buy feed. That's a huge increase. Feed's expensive. You've got to bring it in for your cow calf operation. So that fits into that input price area for sure. It's yeah, there's definitely some interesting headwinds here, and
Mhm.
and how people try to kind of it's very interesting to me, the factors that pushed how people feel about what's in front of them. I think and of course we always want to make sure it's being concerned about input prices, or it's being concerned about commodity prices. Everybody should be asking themselves, okay, what am I going to do about it? Right? What are some of the tools I can use in order to maybe reduce my exposure to these factors having an impact in reality on my future or my current farm financial performance?
Well, and we've seen confidence in marketing and how that has, been going down over the last little while. I imagine
Yeah.
there's a relationship there, one way or the other.
Yeah.
We should really be asking some questions in another survey around risk management and how are farmers tackling these marketing issues.
Yeah. And we've talked a lot about we talked about the convergence of current and future farm financial performance, but also, I think when it comes to commodity prices and the input prices and the relationship between those two, farmers trying to not, you've heard me say this before, but farmers trying to not get caught on the wrong side of the flip. So it took a while for input prices to come up to the commodity prices, especially on the 21 crop. Okay. What we're fearful now is in this sort of downtrend, and if some of the commodity analysts are correct, the downtrend could continue. Hopefully they are wrong. But if we see those commodity prices, slip, and input prices don't to the same extent in the same time period, there's duration risks there and being caught on the wrong side of it. And that's, I think, what's created some cautiousness from farmers and why they think there's some exposure here on these things.
The last thing that we're going to look at here, we ask a new question to try to get a better understanding of our panel, and that was whether they had off-farm income, and wondering, does that influence how they may look at things like farm profitability, for that matter? So I just want to share with you quickly here what the results of this were. So it's not quite half and half, but 43% of respondents indicated that they do have off-farm income. And when we ask, where does that off-farm income come from? It is the farmer or the person answering the survey having an off-farm job. And so that's nearly half of those. And then having an off-farm business, like trucking or a nail salon or insurance agency, could be maybe a seed dealership or something like that. Someone else has an off-farm job. Now we didn't elaborate on who that is, but a son or a daughter or a brother or sister or a husband or a wife. Yep. And then other, which in some cases was all of the above. So we got a number of sources of off-farm income. So that's kind of giving you a look at where farmers are today with respect to this particular issue. Now, we also asked what percentage of income is coming from these off-farm sources. Any comments on this before I move on?
Size of farm. I think what we saw in the data is the smaller the farm, the more likely you are to have off-farm income. That totally makes sense.
Yes.
Like
significant.
Sure. Yeah. Be curious, in the future, we dig into some of some of the farm profiles and some of the demographics on, further who is more likely to. And I think that, there's nothing. Sometimes off-farm income is really, I think, misrepresented. To me, there's nothing wrong with having off-farm income. And I think sometimes it's kind of misrepresented out there in terms of look at all the farmers that have to have off-farm income. In some cases, it's just, I have other interests. In some cases, it's I like to be occupied in the wintertime. There's a lot of reasons why somebody would have off-farm income. One of the questions I would ask, though, would be interesting to know is, of the farms that have off-farm income, is your salary, and I think you're going to maybe shed some light on this, but how much of my compensation is coming from the farm versus the off? Is the off-farm income actually paying the bills and it's feeding my farming habit?
So here's the answer to that question.
Perfect.
47% said more than 50% of my income comes from off-farm sources.
Yeah.
And then you can see it declines as you get down there. So yeah, it's a rather significant amount. And when we ask, has this changed? For all intents and purposes, it's remained the same or it has increased over time. So that kind of shows you the trend.
Yeah.
Now,
I don't think it's surprising.
No, I don't think so either. Now, this is where we can get creative, I suppose, and really start to dig into the data. And we rarely do this in these responded videos, but I wanted to show you a relationship here that existed between how somebody answered the question around off-farm income and how they viewed the financial performance of their farm. So what you see here are the actual results showing, those that said my current farm financial is better off, worse off, or about the same. Now, eyeballing this, it doesn't look like it's a whole lot different. You look at the future farm financial performance here. It's the same sort of thing. And now we've separated between those that have off-farm income and those that don't have off-farm income. But when I calculate the indexes, like we've been looking at earlier, we see that there are a little bit of differences. So first of all, with respect to current farm financial performance, for those with off-farm income, their index is 91. So again, it's negative. For those that have no off-farm income, it is just slightly lower. Okay.
Yeah, virtually the same, right?
Virtually the same. Within a margin of error, it's the same. Now you move over to future farm financial performance and a couple of interesting observations. First of all, those that have off-farm income indicate an increase in positivity. Now it's slight, again, within a margin of error. It's right at that margin of error. So, it either is or it isn't, I guess, a significant finding, if I'm going to be ambiguous about it. But what you see is that the number has gone up, but with those that have no off-farm income, the number has gone down significantly, and the spread between those that do have and those that don't have has widened quite a bit. So I think there's something to that. I think those that have off-farm income may consider it a bit of a risk management tool or a bit of a security blanket, if you will, a cushion with respect to some of the impending concerns they have around farm financial profitability.
Yeah, I know a couple. So I'll give you kind of examples. I got a couple. I know a couple farms who have been really impacted by drought in the past 3 to 4 years, 5 to 6 years. Like it's taken a toll, right? They work in the oil field in the winter months, so that the farm it's a risk management tool for the family, right? And so maybe the farm they don't have to take as big of a compensation out of the farming operation because they've got being well paid in the oil field for the winter months. That to me is a risk management strategy. And some may look at this and say like, okay, but the off-farm income is personal, but then you're comparing it to how the farm financial performance is. But I think we have to keep in mind here, a lot of times by the farm, you've got to put yourself in the farmer's mindset here. And maybe the respondents, you can tell me if I'm wrong on this. People view that as one and the same. They're living on the operation. Like how the family's doing is very tied to how the farm is doing. Like those two things are it's not like you're working at Microsoft, right? Those two things are very, very closely aligned. And so they're managing it holistically. And if anybody has if you want to agree with that or dispute, tell me. But that's why I think this is I agree with you. It's kind of a risk management strategy. And remember, for the smaller farms that are more likely to have off-farm income, this totally makes sense, right? I'm a farmer or I'm a rancher. I've got I've got off-farm income, but I've also got these 100 pairs on our acreage, large acreage for 100 pairs, but maybe 50 pairs. But it allows us to do that. Right. And so agriculture is all shapes and sizes. It's just not all 10,000 acres and above. And I think this kind of this sort of showcases what some of our smaller farms have to do in order to get to the other side of, some of the adversity that's out there in agriculture.
So this is the results of the October 2023 Canadian Farmer Sentiment Index. So before I turn it over to you, Shaun, I just want to thank our panelists for taking the time to answer these questions. These surveys are pretty short. They take about, I look at the results, the amount of time people spend, and it's like 4 minutes to complete this. But thank you for spending those 4 minutes with us, sharing your thoughts. Hopefully these videos allow you to see the good that your input is able to provide to the industry, so that they can get a better sense of how you and your peers are feeling about things. Before I sign off, you'll notice that we've been doing this every 2 months. The gap between our July and October is actually 3 months. We're going to be going to a 3-month schedule now, where we're going to be doing this quarterly. So you won't be getting the survey requests from us quite as frequently. And I think that looking at the amount of time that has elapsed between surveys, spreading that out a little bit might also give us a little bit better insight as to, you know, how is this following the production cycle a little bit better. So look for our next one coming out in January, which will kick off our 2024 Canadian Farmer Sentiment Index. So with that, Shaun.
Awesome stuff. If anybody has any feedback or further questions, make sure you send us an email, shaney@realagriculture.com. Thanks to everybody that answered the survey. Really, really appreciate it. Like Justin said, these are key indicators and great information for stakeholders, whether it's policymakers, to really get some numbers about some quantifiable numbers to understand what the farmer's going through and what your opinions and your sentiment and your behaviors are in this current environment. So thanks everybody so much for being on the Real Agri-Studies Insights panel. Really do appreciate it. And we'll talk to you again in 2024.